Good evening and happy Friday. This is Shayna from the Trade Exchange. And before I even start the weekly recap tonight, I want to extend on behalf of the entire Trade Exchange team our deepest sympathies to those that have been displaced by Hurricane Harvey and those whose businesses and homes have been affected. So you've been in our thoughts all week, and I thought that was important to say before we even got started this week because you've been on our minds. Moving on to the markets, because that is why we are here. Taking a look, we're in the end of earnings season, so I just want to pull up a couple stocks that I did find a bit interesting. And the first one, this is the chart you're looking at. This is Movado. So they're a premier watchmaker, and they make beautiful watches. Well, they had great revenue, and they had great earnings per share release. Their stock, as you see here, it's up 15%. So their earnings per share was forecasted to come in at 23 cents. They beat expectations by 20 cents. They came in at 43 cents. Their revenue expectations were 122 million. They beat that as well. They came in at 128.8 million. Well, not only all that, but they raised their fiscal year 18 guidance up. Topping that, they then announced a 50 million stock buyback program. So keep in mind that corporations will tend to announce these buyback programs when they feel that their stock is undervalued. So it's a very, very positive sign. As if this isn't all good enough, there's the icing on the cake, and that is that we have seen many institutions raising their number of stakes that they own in Movado. So PNC Bank in their first quarter, they raised their stake about 10%. We also saw that QS investors, BNP, Bank of Montreal, Canada, McKinley Capital Management, quite a few number of institutions, they all raised their amount of shares that they own in Movado. So this is really good sign, and you see here the market's responding to it. Movado, you see that nice little boost right there, closing up the week 15%. Now another company, and they beat on revenue, and they beat on earnings, and they did great on same-store sales, but they are down 12% this week. Talking about Best Buy, take a look at Best Buy. So Best Buy did great on revenue, they did great on earnings. Their earnings per share was forecast at 63 cents, they come in at 69 cents. Their revenue forecast was 8.66 billion, they came in at 8.94 billion. And same-store sales, they more than doubled the expectation. Their same-store sales was 2.2%, they came in at 5.4%. So why was this stock dropping? Well, they were on a call with investors, and they said that they feel that they did so great because of the wearable technology and because of smartphones and the smart home products. But they said there's going to be a lot of competitors coming into this technology field and selling these products. So they don't expect that these, toward the end of the year, their mid-single digit comp numbers are going to be the new normal. They also said that gross margins coming up is going to be moderate in the coming quarters. So based on this call that didn't have the most optimistic tone to it and had a bit of that tepidness to it, we saw the stock price respond, and we saw Best Buy shares come all the way down, closing down this week, as you see here, down 12%. But take a look at gold. Gold has had, this is actually the monthly chart I want to pull up for you right now. So take a look at this. Let me get it up here. This is the gold monthly chart. So look at gold here. Gold closed out 1329.79. It's up 2.5% this week. Now this is really interesting because gold has not been above this 1300 level in about a year and a half. And we spoke with some technical traders, and this 1300 level, they said it's a very important level. And now that we passed it, some feel that this bear market on gold could be over. So this is a very important level that gold has now passed. And why are the push into this commodity? Well, it's the political tensions and the tension with North Korea. As you know, they fired the missile over Japan. And then we had the economic data come out today, and it wasn't so great. We had the non-farm payrolls expected 180,000, came in at 156,000. And unemployment rate came in a bit higher than expected. It was supposed to be expected 4.3%, and it came in at 4.4%. So again, we see this push into the commodity, and you see it pushes up this gold, and then had a nice rally. This is the month-long chart, but it's had a nice bull push, closing out the week 1329.79. And take a look at crude oil. So crude oil, it's actually down again. This is the 5th straight week of decline for crude oil. It's down 1.06% this week. So we had our Baker Hughes number come out today, and the Baker Hughes oil rig count came in at 759. So that's unchanged from last week, but you need to keep this in mind. Because of Hurricane Harvey, they couldn't verify the rig count, the oil rig count, for 47 counties across South Texas. So that number may be correct, but again, it wasn't able to be fully verified again across 47 counties in South Texas. Now the U.S. total recount came at 943, so we do know that's up at least 3 from last week. So why is oil pricing still down? Well, Hurricane Harvey has caused a lot of things to go offline. They've caused a lot of refineries to have to shut down. So it's impacted about 3 to 4% of U.S. oil production. It's impacted about 20% of Gulf of Mexico oil production. It's impacted about 6% of U.S. gas production and about 20% of Gulf of Mexico gas production. So even though we do have this, as you know, this glut of oil in the market, the refinery, this refinery activity has reduced the demand for oil because they can't use it, of course, to pump out the gas. We've seen this increase in the gas pricing, but the oil pricing is still going down. Again, oil is closing out 47.33, so it's down 1.06% for the week. Last but not least, let's take a brief look at our indices. So you can see our indices here. We actually did a very good week, as much as there was a lot of discourse this week going on, both with the natural disaster and with political tensions. However, the markets did pretty good this week. So the NASDAQ, let's start with the Dow. The Dow is up 0.79% this week. It closed at 21,987. S&Ps are up 1.35% this week. They closed at 24.76. And the NASDAQ's up 2.71% this week, closing at 64.35. And last but not least, you know I love to speak about the VIX. The VIX, we are far from that 16 handle we were at 2 weeks ago. We're closing out our very low volatility, once again, closing out at 10.13. I want to wish everybody a very safe Labor Day weekend. I hope you have something fun planned. I'm not going to be with you for the next 2 weeks, as I'm going to be traveling myself, but I hope that you all have a safe weekend, and I do look forward to joining you back towards the end of September when I return from my travel. So enjoy while I'm not here, stay safe, and for those that, again, are in Texas and dealing with the aftermath of Hurricane Harvey, you are in our thoughts. Have a great night, a wonderful weekend, and I look forward to joining you again soon. Good night.